What's up, everybody? Michael Silva here to do some technical analysis on the S&P 500. We're going to be looking at the daily time frame and the 30-minute time frame. Let's get into it. All right, welcome back to the daily time frame. If it's your first time here and you're wondering what these rectangle boxes are, this red rectangle is the bear's camp. It's an area of resistance, and the green rectangle down here is known as the bull's camp, an area of support. The stock market has been trading within a somewhat of a tight range. We had 3250 was a level that we were keeping a close eye on, down to about 3000. And just recently, the past 2 days, the price did get above that 3250 level. Let's go ahead and zoom in so we can see the price action a little bit closer. It's earnings season, so the volatility has been picking up. However, this recent breakout does look like the price wants to move higher into this top of the bear's camp, that 3330. That would really close the window. If we scroll back to the history of the chart, it would close the window of this kind of open gap that happened back when the stock market really took a nosedive. Today's price action, gap down. However, it did move up and down throughout the day. Very volatile and choppy type of price action. However, if you look at these kind of candles that took place, one, you had this gap up and then pull back, and then today's price action, gap down and close above it, pretty much engulfing the entire candle. This does make it seem like the price wants to move higher and eventually try to get through this window of the 3330. This is not the type of market that I would be shorting into at this particular point in time, and I won't really consider selling into the market until we probably get a close below 3,000 if it goes down there. As far as the main support that I'm looking at in the shorter time frame, it's going to be 3,200 right here. That looks like a pretty significant level to keep an eye on. Overall, I'm still keeping these purple trend lines up. That is the rising wedge pattern. The price action has been just staying within that, kind of getting squeezed to the upside. This would really look like a good rising wedge if it keeps continuing to move up to close that window and then gets reject, and then we might see that pullback to around 3,200. If we get the close below 3,200, then the next stop would be, I would say, 3,150. We've talked about that plenty of times in previous videos. But this is still, in my opinion, a buy the dip, sell the rip type of market. Now, the president is live and speaking here in the next probably few minutes to an hour. I'm not 100% positive. I don't know what he's obviously going to be saying, so I don't know what kind of effect it's going to be on the market. Now, if you watch this recent video, I'll put the link up here in the thumbnail so you can see what I'm talking about. I talked about the 10-year Treasury bond, and I did get hit up a few times today saying, hey, it fell below that 0.60 level. So let's pull up that chart really quick so that I can show you and why I responded the way I did to these specific people that did reach out to me. So this 0.60 level, if we zoom in, as you can see, there's a lot of price history, a lot of data points suggesting that this is a pretty specific area that looks like it might be breaking down from. And as you can see, we had one candle here, there, and then today's price action really started pushing below it. Now, the thing is, what we need to see actually take place in order for me to really kind of be more concerned is we need to see a close below, a full close, a market close below 0.60. And if we see that close below 0.60 and it can stay there for a couple of days and maybe retest it, and then that support, once it's broken, it then becomes resistance. So if it becomes resistant and hold, I'm kind of looking for a pullback to about that 0.50 level, so a little bit lower than this, and that would really give me some confirmation saying, hey, the market is telling us something and the stock market might follow. Now, if you don't know what I'm talking about as far as the correlation between the bonds and the stock market, you can watch that video where I kind of show you some examples. Nothing is certain in the markets. I'm just kind of keeping an eye on it to use as a potential indicator. So let's go back to the SPX and let's look at the 30-minute time frame to see today's price action. All right, so we are here on the 30-minute time frame. These red and green lines that you see are the support and resistance areas that we mapped out yesterday, and we're going to go ahead and make some edits to keep an eye on moving into tomorrow and potentially the rest of the week. Today is the 22nd, so I'm putting a blue vertical line right here just so you can see where the day actually started and we can kind of walk through it. So as you can see, the market did gap down and we had this run up. Now we ran up to what area? That was the area of resistance that we mapped out previously at 3265. This is why I love technical analysis. The resistance did hold. It came up, tried to get above it, but it couldn't quite close above it, and then got rejected and pulled back. It didn't quite pull back to the area of support that we mapped out. However, if you look where this kind of hammer candle formed, it is a very important area, and that will be an area of support moving forward. So we're going to go ahead and move it up just a little bit here. That's 32.53. We can call it 32.50. It's totally fine, but we'll just make it for what it is right now. We'll just be more specific at 32.53. The price pulled down there and then bounced from that point. It finally did get above the resistance, but it couldn't quite hold it, so it did get rejected. Came back down and touched that area of support, the 32.53, and then finally made its way up into the next area of resistance, which was 32.75. The price did really try to get through it and close above it, but really it got rejected as it moved higher and then pulled back to right about that area of resistance. Now, looking at this, it is above that 32.75, so it technically becomes support. However, if you do look at the history of the chart, this is where we need to be a little bit more specific as far as resistant levels goes, because the price is so close to it. And we typically say like, oh, 32.75, we'll just say that because it's a rounding the number. But right now, we need to be a little bit more specific. So we're going to go ahead and move this resistance up to 32.7660. And the reason why is because if you can look at these candles through here, that's more in alignment to where these candles got rejected. So we're going to go ahead and move that up just a little bit. Now, you can still call it 32.75. That's completely fine. But I'm still looking at as an area of resistance because the price is just right below it. So for now, it's resistance. Now, the next area would technically be just right above that 32.79 or 32.80, you can call it, because the price did move up there. But I'm going to just keep it at 32.76 as of right now. And then I'm going to get rid of this support down here. Now, that'll still be a valid area of support, but it does look like these last 2 hours of price action did push the price higher. Now, as far as I can see it, what's the next area of resistance? We're just going to be keeping a close eye on the top of this window right here at 33.30, because that is the window that I feel like the market wants to eventually come and close to potentially even get above to test 3,400, which is the February market high. But we got to play it as the days go by. So as far as trading this type of market, it's really going to depend on where it opens tomorrow. If we have a gap above this 32.76 level, we might see one of these kind of gap and go kind of days where it just gaps above it and then starts moving higher. If we don't open above that line, we might get caught up within these type of support and resistance areas a little bit more. Like I said, the president is about to speak, so who knows what's going to really come from that and how the market's going to react, or even if it's going to react. All right, that is all I have for you on today's S&P 500 technical analysis update. I will be back tomorrow. Shabba, scooped up, baba.